Good morning, everybody. Happy Friday. Happy summer once again. I hope you all have been enjoying the price action in Bitcoin. Are we soon going to see the God candle that we have all been hoping for? Or is this the end? Let's look at some charts. I got this pulled up through today. Of course, we don't know how the daily close is going to be, but this is how it looks over the all-time trend. Okay, so although an unfathomable number just even a few years ago, perhaps $118,000 Bitcoin, which is what it's trading at the moment of my recording and what I last fed into the model here. $118,000 Bitcoin, all-time high. If you look at it in the context of this power trend, doesn't look too crazy. You zoom in a little bit, looks a little bit more violent to the upside like we had in May here. All right. Yesterday we closed at about 115,000. But as I spoke with Maurizio on his show, which I guess was just released yesterday, you know, the bearish sentiment around Bitcoin, if you have seen it and if you're letting it get to you, should always be taken in context with this. Bitcoin has been declared dead an infinite number of times. And here we are 16 years on from the creation of Bitcoin. Yeah, you can have, you know, double tops, confusing double tops, pretty strong moves to the upside, pretty violent moves to the downside, scams, frauds. But the system itself is on a trend. It's on a trend, as you know, dear viewer. I've been following here for about 7 years, this particular trend. It's way better than anything that has ever been created to model Bitcoin's growth, i.e., stock to flow, variations of stock to flow. And it follows this curve, that is the Bitcoin system, the adoption of Bitcoin, the price action of Bitcoin follows this curve, in my view, better than anything in the stock market. But the stock market is exponential, so always keep that in mind. But let's zoom in here. Let's just ask, again, you can just, without even looking at these different bands of sort of percentiles or multiples over the trend, as I like to do, you can see it's pretty close to the trend still. All right, trend is 106,000, Bitcoin's 118,000. You know, being $12,000 over the trend might have meant something right here back in 2017, we were $14,000 over the trend. But here, being $12,000 over the trend in 2025 means next to nothing. Of course, there are momentum traders and people looking at these hourly candles. That's not what this channel is going to be doing, just in case you're curious. But let's look at the overall bands to see how we're looking. Good morning, Sandro. Good to see you. Yeah, it's natural with Bitcoin. There's always some regret. And, you know, I think probably one of the best memes, which applies very much to me, is everybody gets the price that they deserve in Bitcoin. And that's probably true. I think that's probably true. But congratulations for being in the game. That's all I got to say. There can always be more. There can always be more, and there's always tomorrow. So let's see how far this off is from the trend, all right? So let me show you the extremes first. It's never going to happen again, in my opinion. These are very big extremes, these bands. That is, to the upside, nearly 8x the trend. To the downside, 0.1x the trend, okay? So this stuff didn't happen until back in like 2011 on the downside here, and 2013. It's not going to happen again, in my opinion. Didn't happen in 2017. The downside, by the way, is not even close to these extremes. And then didn't happen in 2021. So extremes are out. What about the 10th percentile and the 90th percentile? This is better. I'm actually going to take the extremes off because you can lose detail. So I'll take them off. Now we can see. So the 90th percentile, a la, or IE, I should say, 2x, the trend is pretty common. Pretty common. And less strong, but it happened. All right, so this is my already extreme on the top side. Downside, the 10th percentile, which is 90% of the observations were above the blue line. Didn't quite happen in the FTX puke of 2022, but it was close. So anyway, let's go now and see how close this current $118,000 is to the trend line. Obviously, we're under the trend. Sorry, for percentiles that are under the trend, we're comfortably above, and I think based on our 4-year cycles, not even close to hitting this. The 20th percentile will be $47,000 Bitcoin. You know, Peter Schiff would like to buy at that price. 30th percentile, $53,000 Bitcoin. 40th percentile, that means 60% of the observations are still above this. $66,000 Bitcoin. 50th percentile, okay, so this is in effect the median. $80,000 Bitcoin. So let me take off the others actually. Even this. So this yellow line, I know I just keep forgetting to change my colors, but you can't really see it. But this yellow line is a pretty strong indication of the median. All right, 50% of observations will be above this yellow line, 50% below. So we're above that, comfortably above that at the moment. Sorry. Okay. 60th percentile, still below the trend line. All right, so that's an interesting fact, right? The trend line is not necessarily the mean or the median. It's just the trend. It's a little bit different. So 60% of the observations as well are below the trend, and a little bit more, because then we have the trend line. I'll leave the 50th percentile just so we can see that. Now 70th, where's that? Aha. So we have found something that we are close to. So it looks like we are right at about $118,000 Bitcoin. We are at the 70th percentile in the whole life cycle of what Bitcoin has done. That is 1.1x the trend. So at this level, 70% of the observations will be below that orange line, including the trend line itself. And 30% of the observations will be above this line. It remains my opinion that we will get above the 9 in this cycle. Okay, a lot of people think we're already topping, or we topped at 105,000. We saw what was happening there. So it remains my opinion that we'll get above the 9. I'll show you 8 here in a second, but you know, we were, like I said, we were always pretty comfortably above the 9. But when you get above the 9, that's the other chart where I break down the 90th through the 100th in single-digit increments. That's where I think we only have 3 to 4 months if we get there. You know, if you take it in totality and a lot of choppiness in between, yeah, you might have 8 months, right? Or 9 months. But there's a lot of Malox moments in between. This was a doozy, okay? This was a double top. You know, imagine you sold here and were happy with yourself, even bought here. All right, well, then you would have played it well, all right? So when it drops below the 9, you play it well. But if you had just held, sold some here because you thought it was going down, then went back up, panic, bought here, it's a rough game. Does it mean that this is going to follow perfectly the next cycle, just like this 2021? Absolutely not, of course. But maybe it only falls below the 9 for like a couple weeks, then goes back up again for a couple months. A lot of panic buying again at the top, maybe. But I would take comfort in this overall. Okay, this was a scary one. This was a confusing one during COVID, a double top. All right, 2 tops at 60K or 60 to 65K, roughly, even close to 70, I guess, on some exchanges here. This was a clean one. Past this prologue, but of course not exactly. History rhymes, doesn't repeat. So let's look at the 80th percentile, number 8 here. What's the number? The number is $143,000 Bitcoin. That would be the 80th percentile, or as you see, 1.3x. Good morning, Anders. Good morning. Yes, it's happy days here. Happy days for those with conviction. So 1.3x, we're already, this shows you again, I think it's a good example of how long we stay under trend most of the time. Right? I mean, the trend line itself is between 60 and 70, I think closer to 60% of the observations, right? So it means by definition, 2/3 of the time, the price is under trend by definition. So we form these bottoms much longer, much more commonly than we form the tops. So it gets difficult. I by no means am an expert. I'm doing this for my own benefit as well as for you guys, just so you know. This is not me lecturing. Let me know if you have any comments, because I'm trying to figure it out myself. So again, it remains my opinion. We'll get above 8. We'll get above 9. The numbers there, 80th and 90th percentile. But above 9, I think, is pretty, it's pretty much a definition of silly season. Above 9. Okay. And obviously, you know, this was a double top too, right? I mean, I was not, unfortunately, not taking advantage of this back in the day, but I remember this going up over $100, and then people saying like, "Oh, I should have sold," or whatever. Then it went up over 1,000. Like, you know, Bitcoin. No one knows exactly how this next one's going to play out, but it can fool you. And obviously, if you weren't nimble enough, you sold the top here, were proud of yourself, but then didn't do anything here. You know, you'd have to wait a while to buy back. And actually, it was never as low again as this, right? Like right here, under $100. Never as low again. So this is also a lesson. But this is a perhaps less likely scenario, perhaps, because we're growing much faster here, right? The slope of this curve was much faster than the 45% per year it is right now. But yeah, if you sold the top here at 100, we're proud of yourself. Did nothing here. So like you missed these gains, but then, you know, you had to wait here and sort of, maybe you forgot about Bitcoin entirely and never bought back. But even if you did buy back, you'd have to buy back higher at the top you sold here. So this was a tough one as well, 2013 top. Thank you, sir. Good morning, Daniel. No, I mean we're getting into, you know, put Sando's comment back in. We're getting into the fun season here. So let's look at 8 actually before we look at 9, because now this stuff kind of matters. I mean, we're here. So remember, 50% of observations below that yellow line. All right, so that means, you know, the yellow line is below the trend line, as I said. So things get crazier the higher you go up, by definition, because there's less observations, less days where you get this sort of a price. So remember, we're at the equivalent of 7. All right, so if it was 2021, rolling up into the COVID madness and then the meme stock madness, 7 held for exactly November 2016 to December 2016. Well, let's say a month. It held a month. All right. Then we popped up to number 8. Let's go back again. So 7 held a month. Pop up to number 8. And then between 8 and 9, less than a month. January 6th, Christmas. Back to Christmas. Christmas to January 6th, so half a month. Was that January 6th, the actual January 6th of U.S. infamy? I guess it was, right? January 6th, 2021. I'll get censored for saying that date. Yep, I agree with those numbers. Anders. But this is where I think it's valuable to look at these different bands. So, all right, let's go back to 2017. 2017, this was the summer of Ether. ICO insanity. Complete bubble. My buddy Fernando and I did a show on how ICOs were a bubble. It was so bad. Let me take off. Let's just look at 789 again. All right, so a bit different for 2017. 2017, we hit number 7 where we are right now. Right now we're at number 7 at 118,000. You know, half a month again, roughly half a month, couple weeks. Dip back down though, and even out of number 7, and then back in August. So that's what, 3 months? Let's just call it 3, 2.5, 3. Actually closer to 2. But if we count this as the 7 come in, yeah, full June, July, August, 3 months. All right. So again, we're at number 7 now. In 2017, it took 3 months to get to number 8 with some excitement above it after a couple weeks, but then falling back. And then sort of the same process repeated with number 8 to number 9. In August, when we got through, and this is exactly when SegWit was activated, the Bcash fork happened, SegWit 2x was getting postponed. That eventually failed somewhere here. I think it was November 1st, or was it November 7th? Anyway, so from August to going into number 9 squarely, again, 1.5 months, 2 months. So yeah, this is a good point from Sandro. You know, if you want to ape in and ape out of these percentages, as I am saying, you could be sad really quick. You got to be comfortable with what you're doing if you're going to do it. Never financial advice, as I always say, but you'd be very sad if you got out here, then missed all this here, and then didn't buy back even till here at a higher price. Okay, so it could totally happen to you. So that's why it's very difficult to just, you know, a swing trader would be like, oh, these are just easy swing trades. I'm going to completely exit my position. It'd be fairly difficult, especially with Wall Street as involved as they are. But anyway, I think we established with the prior 2 tops, you know, when you jump between these bands now, we could be looking at a month or less, and then back down a little bit to 3 months, a month to 3 months between these bands. We're now in this territory. So 15% is an interesting number, as he said. If anyone wants to share what they think, it's how much you'd be willing to exit at a profit. Obviously, everybody in Bitcoin's at a profit right now because we're at an all-time high. Yeah, it was definitely a casino. You know, technically we could do exactly what we did when Trump was elected, right? Trump fervor here carried us above 7, then we fell back even before his Liberation Day. That's actually the only time, well, except for 2010, 2011, but I guess here in 2019 we did it, right? This was a pump summer. I remember this coming out of just the doldrums of 2018. But it fell back again before the craziness of COVID happened. But anyway, I think obviously that's not going to happen again. I would be highly surprised if we spent like 3 months here and then dipped below the 7 again. Could happen, but I'm pretty sure we're moving close to this. All right, moving up the mountain, moving up the mountain. My opinion. Yep. I agree with that. Oh, nice. Good for you. Has your interest affected you here? I've used leverage on just exchanges, nothing fancy, but the interest has usually killed me with leverage. So I haven't done it too often. But I've held them for a long time. Like if I've levered, I've gotten, I've done some levered trades, but it's like maybe here. In fact, it was like here coming into there. But then if you don't get rid of it here, say you bought here, like that interest really affects you the longer you hold the leverage. I've had trouble with that. It's because the rate is so expensive still. Yeah, I would not lever anymore. But my experience, just to maybe provide insight again, is like even again, I'm not a expert swing trader, but when it's so low, and it's not really going any lower based on these cooler percentile bands, then I think it's a good idea to lever, personally. But the problem is the time that you pay interest here in order to wait for a trade to unwind. Like you're still profitable, but it's kind of weird. It's a lot of interest to pay. Mm. Yeah, obviously those are the worst too. I've had flash crashes pull me out of trades. That's the risk of a stop loss or a margin call on your position if you use a stop loss. So, story remains the same, in my opinion. It's not that fancy of an analysis, really. I mean, it's comprehensive and coherent, but like if I would sum it up, it's kind of pretty basic, right? Like 2017, we went above this level, took 6 months, 7 months, 6 months, 6.5 months. Actually, 6 months exactly, wasn't it? Yeah, mid-May to mid-December, and that was it. 6 months. Sorry, 7. That is 7 months, isn't it? No, I think it would still be 6, right? Because you would have to go into January to be 7. Yeah. Yeah. So it seems to me that 3 months between these 7, 8, and 9 bands is reasonable. And then 3 months above the 9th band is reasonable. And if you get above that 9th band by start of 2026, we're at that 250K. Yeah, that's good. That's smart. I wasn't paying attention, frankly, and That's a decent. That's still a decent rate. I was paying more. I think. In fact, I know. Yeah. Well, you're in a great position, Sandro. I know it's the biking business, right? I mean, you have normal cash flow, normal business. You got to take care of that. But then you have the juicer with spot Bitcoin. I think is totally reasonable. I was going to get a volume. I'm getting more data slowly. I was going to get a volume spot and a volume, try to get volume of the Wall Street stocks, but I didn't have time to put it together. But I will do it. Like the ETFs, ETFs, MicroStrategy, MetaPlanet, even. I can get this data. So I'm trying to work on that. Very good. Very good, Anders. So nothing much changed, but obviously these are exciting, numbers for everybody, and people are going to get excited, and people are going to maybe make bad decisions. Again, I'm not lecturing. I'm talking this out loud for myself, just as much for you guys. But I wanted to go back to Apple because I got more data on Apple too, just to show this. So here's the same idea, right? But Apple is exponential. So I'll take off all these bands. Just like every other stock in the world, literally. Everybody goes like this. Doesn't matter. Sometimes you're slow exponential. Sometimes you're fast exponential, but you're exponential. So it's a straight line overall. This is back to when they IPO'd, right? So back in the 80s, start of the 80s. This is about a 20% slope per year. Pretty fast. And from here, right, from this run up here to today, it's like a 22% per year, which we talked about. Yeah, I mean, probably, honestly, I haven't paid attention this morning to any particular news, but just going back again to Bitcoin, like the fact that people were so bearish, some, not everybody, but just some people were so bearish thinking that this had to be a top or this double top from May around 105,000. If you just look at the big picture, you see that Bitcoin's got a way stronger trend, just like Apple has a trend. Okay, so here's Apple. And I want to back this out now to show you how it's different than Bitcoin. Obviously, you can use your eyes to see that cyclically, this is way different than Bitcoin because, like the 80s, okay, they were forming a trend that was flatter than now. Still going up, like, lower left, upper right, but, you're still at 33 cents split adjusted or 40 cents in 1992 compared to 10 cents in 1980. And then way down, then way back up. Jobs comes back around here, I guess, and down again. This was the amazing time to buy right here. But in any event, the cyclicality is what's amazing about Bitcoin. We go up, we go down, we go up and down around this black line. And also, it's not an exponential curve, which I can revisit if someone wants to see. But anyway, here's exponential. These are the extremes again. They're very unlikely when you hit these extremes. Okay, for Apple, it happened on the top side and just before the financial crisis, and for the downside, it happened here in the 90s, mid late 90s. So I take them off. I go back to the 90th and the 10th, and then And then here's what I want to show, which I think is interesting. If we look into today, last couple of years, and then today, see how like this is the evolving, right? Not this. I really should put it in black, but imagine there's an evolving trend here, right? And then you switch and expand out on the all-time trend. So as you can see, the all-time trend is like a little bit flatter compared to the last really 10 years of Apple. It's steeper. See how it's just a little bit steeper? So it's the very recent years were moving really, really fast. But then it had to slow down when you do the, you know, the extrapolation, because you got to take into account all this other stuff, which wasn't really fast. And if I was a billionaire hedge fund manager like Jim Simons, who I mentioned yesterday, you know, recently passed away. As far as I know, he was just doing applied statistics like this. So he would be, mine is very much less fancy here, but, you know, okay, since the all-time trend looks less aggressive, but recently, you know, they're moving faster, as you can see with these 9 and 1 moving, it's just a little bit higher slope. Maybe we'll adjust our trend to be a little bit higher and only look at the last 10 years of data or whatever. And that was a big part of their business over at Renaissance Capital. I'm just using it as an example to show you that even a big liquid stock like Apple works differently than Bitcoin. Let alone the fact that this is a straight line on log scale, exponential. Apple's a Bitcoin's a curved concave down line on log for Bitcoin. You're talking about Apple here? Yeah. Yeah, it's incredible. This is log scale, so it's hard to see some of this stuff. You don't point it out or you don't stop and look, but let's even take the all-time off because it's evolving is actually better. Yeah. Incredible. So that's $6. $3 is a 50%. It went even more. Wow. I didn't know they were even so levered to be hurt by the GFC. But obviously it's harder. You got to do more statistics and different lines and everything. But notice how the all-time trend is not that helpful for Apple. Like, this is better, this sort of evolving, moving trend line. It's kind of like a moving average, but it's not exactly a moving average. It's but if we put the all-time trend in, it's sort of, it will catch all the data, but might not be as apropos for today. And that's okay. But I'm just saying with Bitcoin, like, it's pretty incredible how, as I've said many times, from about 2016, you start catching, like, all these bands look almost like the evolving trend. So I take a lot of comfort in that. Back to Bitcoin. What's the reason for the price rise? Yeah, I can agree with that too. It's not, Wall Street's definitely playing a lot more in Bitcoin here. So anyway, I wanna keep coming back to this, and I'll do some other stocks as well. But when I keep bringing up how Bitcoin works in a more sustainable power growth, but everything else grows in exponential, people say, well, exponential has to break. I think it can break, and it often breaks when we move from one system to the next. But sometimes we even move faster. And this is what Fred was talking about yesterday, and what I was also saying when I was talking about the book Scale, written by Jeffrey West. His idea is that actually when exponential trends break, they break faster. So you can kind of even see it here maybe. Like this was one exponential curve, which was slower. And then this is another exponential curve, which is faster. So it's a change. It's a change faster. So we actually wouldn't expect the all-time to help us here because Apple's already moving in a faster progression. And then that takes us back to this one, which still confuses me. This is market cap only looking from when Bitcoin was involved or around. So from 2008. And if you, take these off. If you see, right, Apple is, if you just catch that 2000s type trend, doesn't really matter where you started, 2000, 2005. Here I started in 2000, start of 2009. Actually started right on January 3rd, 2009. This is a trend that Bitcoin will pass briefly, but then exponential keeps growing faster. Back to Bitcoin. Possible. And there's very little Bitcoin in governments, relatively speaking. Like I said, $50 billion worth, at least public. $4 trillion worth of gold is in governments versus $50 billion with Bitcoin. Another one on exponential, really quick. I know this is a bit geeky. I'm not going to lecture on it, but this is world population. I got this from Our World in Data. Good website. Oops. We talked about this yesterday. I asked Gemini about population growth because people were saying that from 1960, we've gone off of exponential. So I just want to do the long-term trend. This took me forever with BC dates on my software. You'll notice right here at year 0, this counts backwards, but at year 0, I'm at my Unix time of 1970, wherever King Herod was murdering babies. But in any event, there's 100 years here where the years are weird. Don't worry about that. The timeline's correct. So we go from 10,000 BC. All right, this is from Our World in Data, I guess from archaeological studies. 4 million people, 4.5 million people. And then obviously this is linear scale, the hockey stick. Now to 8 billion today. So the question is, let me zoom into like the Industrial Revolution or Middle Ages until the Industrial Revolution. What will be the all-time trend exponentially? From 10,000 BC, right there. Super flat. But this is an exponential curve, actually. So I think what this actually exhibits what Jeffrey West was talking about with scale is it's a faster rate of exponential. Still exponential, but it's just a faster rate. And then if we took the 1960, what's the 1960 curve? Only looking at 1960, oh, it says 1969, but it's 1960, sorry. What is it? There's a 1960 curve. And we're a little bit falling from there as well. If you zoom in, you can see that population is kind of over the curve, and now it's back under the curve. But anyway, the curve here it's actually it's not 1.1%, which other people are saying, but at least the regression from 1960 with this data is 1.6% per year. That's the slope of the black line. The all time, or 10,000 BC, would be 0.4% per year. It's just what it is. So it's interesting. I mean, this is, and if you use the 1969 curve on population, projects a worldwide population in the year 2100 of 20, is that 29 billion? 29 billion people. And it probably will slow even from there. So I just say it to remind that when a curve moves from one level of exponential to another level of exponential, it didn't move to power or logarithmic or linear. It just moved to a different level of exponential. So that's what happens with everything. But the nature of population growing is still exponential. Remember, we did a hallucination of Gemini yesterday, where first he said it was not exponential from 1960. Then they said, actually, it's 1.1% from 1960. And by my count, it's actually 1.6. Anyway, the point is it's always exponential for worldwide population. It's just overall a much faster pace, industrial revolution times than all time. And probably will slow down again now just because of, well, you can see it slowing down. But still pretty quick, like 1.5%, 1.6%. Slope of the curve is 1.6. It's just a small little interesting tidbit. So if you extrapolate that idea, right? These are two very different systems. Oh, this is money. It's a different one, but so here's the TradFi system. I'm just saying represented by Apple, even as a technology company, versus the Bitcoin system, which is power. It's a very interesting question. What will happen? Like as these things meet, will Bitcoin actually be pulled into an exponential system, or will TradFi get pulled to a power Bitcoin type of a growth? I think one of those things has to happen. I don't think Bitcoin can remain power if you have other larger companies that will grow exponentially. It would actually be, it's a long decision for people to realize this, but, they might love Bitcoin for the next 20, 30 years, but if they see Apple still growing at the same trend relative to whatever currency we're using, even if we were using Bitcoin, people will just start holding Apple. It's maybe too philosophical for this morning pump. Yeah. It's a good illustration of this jumping from one faster treadmill to the next. Hold on, let me put this on log scale. We should be able to see it better. So here's log. Okay, this is still before Christ. Here's Christian. It turns into 2000. Ignore this part of the date, which is 1933 here, 1946. That's wrong. The numbers are correct, but the date I can't fix my Unix. Anyway, so 240 million people apparently around the time of Christ. Lowers a little bit and then booms around 1,000. It really picks up here. It's all continuously exponential. It's just a slightly faster rate, even not really much actually. So, well, I'd rather calculate it rather than tell you. I didn't calculate from here, but The all-time curve is pretty low. It's only like 0.4% per year, whereas here is 1.6% per year. But that's exponential growth. And Apple does it, and everything does it. Every stock does it. Bonds do it. This is exponential growth. But this is power growth. Anyway, I just wanted to geek out a little bit with the world population since we talked about it yesterday. If anybody has a question on that. Also, regardless, Bitcoin grows faster than anything, including Apple right now. So Apple is one of the fastest. And these are market caps. Let me do the slope of each. Let's go log scale. All right, so Bitcoin at the moment is growing at 45% per year, roughly. If you got it in the olden days, you would have had some nice returns. But Apple and a few of the big stocks actually, you never quite know until you graph them. And it does not mean Apple will continue at 22%. It could become a really big top-heavy company and fall back down to 15% growth or something. Who knows? But at this rate, Bitcoin will fall below Apple in the year 2038. So if you did the dominance, Bitcoin would reach 100. Where do we? Actually, it might never reach 100. Huh. Oh, no, it does. Dominance is here, right? So it reaches 100% of Apple, right, in 2030, as I showed. But it's only very briefly. Then it crests and goes back down. So again, it's fine if Bitcoin is not as big as every stock or not as big as an aggregation of all stocks. But this is the confusing thing, or the strange thing about power growth, is it's usually applied to networks. It's not really applied to economics or value. But that's what it's doing. So here should be, in fact, probably is the peak of Apple's dominance versus, sorry, Bitcoin's dominance versus Apple. Will be somewhere around 60 trillion. $60 trillion worth. But if Apple continues at the same trend it's been going on for the last 20 years, 20, not 40, the last 20 years, then it keeps going higher. I put this question to some guys that follow the power law. I haven't heard back from anybody yet, and Giovanni included, so see what they say. But it's a bit philosophical for now. And even when you look at worldwide money, this is why I didn't think about it much before. Like worldwide money will probably pass it in early 2040 at 150 trillion. That is Bitcoin larger than worldwide money. And you don't really need to think about it, even though you can tell geometrically it's going to go back under again, like 50 years after this. So I'm actually pretty convinced by the math that either Bitcoin will sort of get co-opted into our exponential system, however that looks like, and the price of Bitcoin starts going up exponentially, or the prices of exponential assets will start to change and morph, maybe on a Bitcoin standard, to start moving up in this gentle power curve way. But I don't think it can be both. I don't think Bitcoin can actually stay like that for an indefinite period of time, or at least both asset classes, meaning TradFi versus Bitcoin, Bitcoin versus everything else. These are incongruous systems. Anyway, geeked out a little bit on the market cap stuff. Big lesson for today. We're in the 70th percentile. That's what this pump represents. And just one more thing about the philosophical stuff, like what a Bitcoin standard could look like. I do think Bitcoin would win in either situation. But if Bitcoin went exponential, that would mean that there's some manipulation of the money supply, really, that you can have enough interest to keep paying down new Bitcoin denominated debt. It's an interesting thought. Anybody have anything else? Other questions? These bands happen fast, way faster than the blue bands below the trend line. Me neither. Me neither, Anders. I talked to Marty about this on his show as well, and he's, because the hyper Bitcoiner people were always thinking that, there's going to be no debt in the future. Everything will be equity based. It's an interesting thought. That itself seems strange, but maybe it will happen. If everything was equity based, then basically you only had to just wait for your either Bitcoin to accumulate that you had or work for more Bitcoin, that'd be fine. It's a deflationary thing, basically. It's also important to say, by the way, that deflationary systems, the awkward things about them is that you would have the need when you do your contracts, or even when you do your deals with your employees, your salaried employees. You can listen to my first podcast with George Seldrin. We talked about this. Is that they do become awkward. This is kind of why, not the only reason, but one of the reasons why inflationary systems just happen. It becomes awkward, like with your employees, that you have to say, okay, you're actually going to make less next year. Prices are falling. We're in a disinflationary or deflationary environment. You're going to make a little bit less. That's not going to happen for a long time if we had that, but there is the possibility that happens. It's not a problem for making money, because that's the propagandist line from the central bank, is like, oh, people won't spend because you'll get in this horrible feedback loop because prices are going to get cheaper next year, next year, next year with deflation. So nobody's going to spend any money. Firstly, obviously, that's just not true. I mean, people have present needs and future needs. But even if you grant that it might happen a little bit and that businesses sort of couldn't calculate, that's actually not true at all because businesses earn their profits on the margin. So even if in real terms, if your income statement was like a little bit less next year and next year because of this like disinflationary structure or deflationary structure, you could still make money on the margin because your costs would also be lower. So you can keep going with lower and lower and you can still make a profit as a business in a disinflationary or deflationary environment. What is hard though is to tell your employees that they're going to get less money, that they're going to get less money in their salaries. Let me check. Yeah, that's the simple way to just look at it is let's not philosophize too much, especially during this cycle. Yeah, that's a good point. That's a good point. In the future, as Bitcoin buys more stuff, you'll have to spend less Bitcoin. So it's better to save that Bitcoin now. And that's actually been the way it has been the entire time, right? I mean, even for the OGs, that we just saw this 80,000 coins move, right, on July 4th, which I guess was Roger Ver. You know, there's a price for every Bitcoin. Roger or whoever that was could have waited another 5 years for it to be $500,000 Bitcoin and not 100,000, but he moved them now. There's a price for everything. But this is it's weird. It's a weird thought. Anyway, I don't have much else today, guys. I don't know if you want to look at another chart. Exponential and power. I do want to get, and I will get some better on-chain data soon, like more accurate stuff, more detailed, I should say, because the APIs I've had have been not as good. Got to pay for some more stuff though. And also this, like I said, the TradFi mix into Bitcoin is interesting. And apparently MicroStrategy stock is starting to move a little bit like Bitcoin. Also interesting. I mean, it makes perfect sense. Maybe MicroStrategy will be the first stock ever to move in power. So I need to graph that as well to see. $500,000 Bitcoin by the end of the decade. Yep. Thanks, Anders. I'll get there. I will get there. This, by the way, if we get out here, so this is also nice, and this is why, like, I'm not worried about really anything about these Bitcoin supposed tops at the moment. So if you go out to 2030, I've said this a few times, but this line, remember, it changes every day based on the latest data. So as it was pulled down in the 2022, 2023, 2024 down cycle, well, before that cycle, let's say, back in 2021, if you drew the power curve, you can't even really see it with the naked eye because of the sensitivity, but the curve itself is about $600,000 at this moment. 600,000. And then because of the last couple years, it's been pulled down gently to about 550. So it's been pulled down $50,000. But we've ended that period, right? So all of that pulling down has ended. Now we're in a period which is more exciting. We're going to start pulling it back up. So I'm actually curious. I mean, I already know by default it's been the same since 2016, like I said, but I'm curious of where the number's going to be for that date in particular, because I've kind of been following it. It should be, it should get back to 600,000 or so around here. That is the black line, and all lines will start to pull themselves higher as the price now is every day stamping a new set of, history higher than the black line. It will pull it higher. So that's just another tidbit of how the model works. You guys can find everything here. Probably need to say this more, but I've had this up for a long time, but it's always helpful if you can send any sats, lightning. I'm going to try to be the newsletter guy. All the stuff's for free. Better than you'd get in any newsletter, but having a little bit more cost now with these APIs. So, the Taiwan dollar got strong here. So this update's based on currencies. Taiwan dollar's pulling up a little bit here into the top 10 central bank money ahead of the Australian dollar. Interesting. Used to be Australian dollar here, or Brazil. So you can find all the charts, everything here. Not all the charts, I should say. You find a few basic charts, but it's just too hard to. All this stuff is locally, and like I said, I do it every morning before I stream. Like, not from scratch, but I tinker with things. All right, guys. Hope everybody has a great weekend. Thank you for watching. Oh, and one other thing I wanted to say about the Satoshi stream, which is pretty interesting again. Maybe not a lot of people caught it or understood it, but a lot of people have a lot of ideas about what they want Satoshi to be. And I just thought it was a heartwarming comment that this Japanese, Belgian, Canadian wrote in from Ukraine to that podcast, Ukraine the Latest, a couple days ago, named Satoshi. And that would be a fine view of Satoshi if it was, if I had my druthers about who Satoshi was, but we'll never know, perhaps. Thank you, Daniel. Thank you, Sandro. Good luck with the business to everybody. Peace, guys. Take care.